Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring. Today is Wednesday, May 8th, 2024. Just wanted to share a trade that I took with you today on McDonald's on the 5-minute chart. It's a really good example of using multiple time frames in your trading. And so let's start off with McDonald's here on the daily chart. I highlighted this potential setup on my last weekend review podcast, and I was looking for McDonald's to come back into this green highlighted area, which obviously it has been. When I did the podcast, it was up here, and just, good time to mention when I look at my potential stock trades for the week, they can be a long ways away of where they need to be, but I let them come to where I would be interested. And this is where I'm interested, in this green area. So let's start off, first of all, why is that? Well, back here on the 18th of April, we took out this swing high, putting us into a bullish market structure. And from the low of this bar on the 18th to the high of this bar on the 16th, in between this high and this low, this is the fair value gap, which price tends to come back and want to fill because there was no price discovery in this area. In addition to that, this bar here on the 16th, this low bar, before the market structure changed to the upside, this is called an order block. And very often a price will bounce at that order block after it's changed structure to the upside and then come back down to it. Okay, so you have a fair value gap from here, and the optimum place would be here at the low of 416 because that's the high of the order block. So yesterday, you can see we did get right. We just barely went below that order block and bounced a little bit. So this is a day trade, but I always try to mention that I really like to look at a higher time frame, in this case the daily, to look for the daily to get to the area that I expect to bounce. And if on the daily it gets there, then I can switch to the smaller time frame to place my day trade. Does that make sense? So yesterday bounced at the top of that order block, rejected it, and closed above. This morning I saw it go back down, and so now I'm going to switch to the 5-minute. But I just wanted to make sure to point out of why I even traded and picked Microsoft, because on the daily it was here right in that buy zone, which would be a buy zone for the daily. So this is what tipped me off to looking for an intraday trade on McDonald's. Make sense? We came all the way back down into the fair value gap, and even better, we got to the top of the order block. So this is why I'm interested in McDonald's on the 5-minute. All right. So let's go back in time here and start off the day. This is where we started off the day. Okay. And you can see this green area is what it was highlighted from the daily, right? So we start off the day here on this bar, and we go below and go above. Okay, it's for a day trade, that's not enough of a signal. So let me just take you bar by bar. We went down, now we're below the order block. We go way below the order block. And then we rally hard. And do you see this bar here? Do you see how we take out this swing high? So just on the daily, we reversed back to a bullish order, to a bullish market structure. But now on the 5-minute, by this bar taking out this high, this creates its own fair value gap, and then it goes even higher. Well, look, just like I showed you on the daily, that there was a daily fair value gap, which is the green highlighted area. Now we have a blue area because now we have another fair value gap. We have a fair value gap within a fair value gap. Does that make sense? So here is bar 1, here is bar 2, here is bar 3. You take the low of bar 3, the high of bar 1. So this is a fair value gap as well. The blue area, in addition to being in the higher time frame, fair value gap. So it's a fair value gap within a fair value gap. So I did not buy here. I wanted it to come back down, ideally to the bottom of the fair value gap, ideally. So I was very patient and look, came down and rejected that. I got long here at 267.24 because the daily got to the order block, which more often than not will bounce. And it also was a fair value gap on the daily. And then on the 5-minute, like I just said, we started off the day here. We had a huge move up. We changed market structure on the smaller time frame, came back and filled that gap. And that's where I got long. So it's very interesting. We have a fair value gap on a smaller time frame. We closed the fair value gap on the higher time frame. That sets up for a good probability trade. So I got long here, 267.24. I placed my stop. This particular trade, I just decided to go. I'm going with the 2 ATR stop or a 4 ATR profit target, whatever comes first. And that's correct trading, having a smaller amount of risk and a larger amount of gain. But the most important thing here is because I have a fair value gap within a fair value gap, the odds are higher than it's going to go my way. But if I'm wrong, I'm only going to lose 2 ATRs. If I'm right, I'm going to make 4 ATRs. I know it's a little bit of an advanced trade, but I haven't seen this happen very, very often, and that's why I took it. I mean, this smaller time frame reversal or change of market structure and pull back into the bottom of the fair value gap is almost identical to the daily. So anyway, that was the plan. 2 ATR stop, 4 ATR gain. One of the two was going to happen, just to set it and forget it trade. And so again, I got long here at 267.24. Next bar didn't do much. Next bar up a little bit. Next bar down, but not to my stop. And then we turned around pretty quickly. Big up bar, another up bar, down bar, and then we moved up strongly. And here we go. Got to my 4 ATR gain. So nice gain, entry at 267.24, out at 268.49. Was about an hour, but hey, nice trade, right? And it was a high probability trade. And then I got out here 268.49. I think I said 94 before. And then look, got out. It's like, oh, I nailed that. Look, came right back into the fair value gap area. I didn't buy it again. But as soon as you got back into that fair value gap, look at that. Rallied again. Yep. So anyway, really good example of using multiple time frames, looking for support on a higher time frame, looking for support in an entry trigger on a smaller time frame. But I thought it was a really good example. If you'd like to learn more about my trading and my different strategies, I do have a podcast on YouTube each Saturday called the Weekend Review, where I go through all the trades that I took during the prior week. Talk about when I entered the trade, what strategy I used to enter the trade, and most importantly, how I am going to manage the trade going forward. And then I talk about the different setups that I'm looking for the prior week. So if you'd like to learn more, come by, check out the podcast. I think you'll enjoy it. I hope this was helpful, everyone, and I hope you have a really good rest of your day. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.